What does the supply chain advantage look like? Start with 12,000 experienced teammates. Add the precision of 20 modern distribution centers, the reach of one of the nation's largest fleets, merchandising solutions that drive sales, and custom technology applications that make doing business easy. Together, it's how we enable you to buy better, sell smarter, and profit more. McLean, your supply chain advantage in action.
In an update of the NPD Group's research of consumer shopping habits in convenience stores, David Portalatin outlined trends and metrics during the recent CSP Outlook conference to help retailers with strategy planning. To set the stage, Portalatin provided a look at the broader retail landscape, noting that in 2010 and the first half of 2011, several channels, notably footwear and appliances, saw healthy growth. One key indicator, total restaurant traffic, however, suggests consumers are still feeling pinched and are not quite ready to spend. Restaurant traffic has been flat for the past 3 quarters and continues to languish at 2006 levels. Meanwhile, the number of miles consumers are driving continued to lag behind previous highs, specifically 45 billion miles below November 2007 rates.
The reality is consumers are cutting back on how they use their automobiles, and that has a direct effect on your business. As long as we stay substantially above the $3 per gallon level in real dollar terms, we're going to continue to see very stagnant numbers here in consumer driving patterns.
That's at least partially responsible for the drop in convenience store traffic, which is down 4.2% as of Q2 2011.
If we were to break that down just a little bit, one of the most interesting things that begins to emerge is if we look at what we call traditional chains. Think of these chains as, by and large, those that did not come from a predominantly gasoline marketing heritage. All of your large regional convenience brands are included in that. Consumer traffic is actually up 0.5%. If you look at those that we call major oil, that is to say those chains, those stores where when we ask the consumer, where did you shop? If it says gasoline brand X on the canopy out front, that's what they're going to tell us where they shop. That's where the biggest traffic loss is coming from, by and large, down 7%. And once again, it's because of what's happening with miles driven in the gasoline marketplace right now. And then the smaller and independent chains are suffering, perhaps from lack of resources to deal with some of the difficulties and to continue to invest through difficult times.
The NPD research, conducted exclusively for the Outlook conference, shows another aspect lending to that traffic loss is the growth of channel blurring.
You're out driving around in the afternoon, you get thirsty. Where do you go to for a quick drink? Well, convenience store ought to be number 1. It's only the number 3 channel mentioned. Consumers are going to restaurants, number 1. They're even walking into grocery stores. And when we first saw this number come back in the research, there's naturally a tendency to question that and say, well, that can't be right. We're not really capturing the right occasion. The survey was poorly designed or something of that nature. So we start digging around a little bit more, and we go into our CREST service, a consumer reported eating share trends that tracks the restaurant industry and has for 30 years. And here's what we find. Quick serve restaurants, in terms of total number of servings in the afternoon day part, that prime occasion that is the peak traffic day part for convenience stores, that afternoon snacking occasion, quick serve restaurants are outselling you on fountain drinks 5-1. Does that surprise anybody? I was surprised, I'll be honest with you. And you know, when you're in the research business, you're smart and healthy to question things and to push back and say, well, maybe we didn't get that one right. But the more we investigate, and the more we look at the billions of consumer transactions are taking place, the more that I know that's true.
Other categories in which consumers preferred channels other than convenience stores included alcoholic beverages and snacks. Underscoring price and speed of service and promotions could go a long way in closing that gap. This is Steve Holtz reporting for CSP.